Credit scores are genuinely one of the most frustrating parts about purchasing a home for so many people today. And a lot of people always ask me, what does my credit score have to be? Are there certain thresholds that I have to meet? And today I kind of want to demystify what exactly is going on with credit scores, because the minimums are a lot lower than what most people think, and there's a lot more flexibility than what might be presented to you on a day-to-day basis. Now, when talking about credit scores for specific loans, there's a lot of different loans that have a lot of different requirements. So the first loan is going to be a conventional loan. This is one of the more common types of loan, and this requires a minimum of 620 on your credit score. Though you'll get better rates if you're above that 700 mark, and it's going to be a little bit easier to qualify as well. So 620 is going to be your minimum threshold, but if you want good interest rates, which will make your monthly payments a little bit lower, then you're going to want to be above that 700 mark. So another loan option that I want to talk about is an FHA loan option. And when I say this credit score, it's going to be a shock, but the minimum credit score that you need for an FHA loan is 500. Now, if you have a credit score between 500 and 579, then you're going to need 10% down. That's still not bad. A lot of people think 20% down for every loan, but even if you have a credit score of 500 to 579, 10% down. Now, this gets better if you have a credit score of 580 and above. You can still use the FHA program, but then you only need 3.5% down. So on a $100,000 house, this is the difference of $6,500. On a $400,000 house, this is the difference of $26,000. So really, really important. Even though you can qualify with 500 to 579, try to get above that 580 mark. You'll have more opportunities, less money out of pocket, and it's going to help with your interest rate a little bit more. Now, the third loan option is the VA loan option. And though there's not technically a hard cutoff point for what credit scores are allowed or what credit scores are not allowed, typically lenders like to see you be around that 580 to 620 range. This way they make sure that you're a reputable creditor, somebody who's going to pay back the loan. And 580 to 620 still puts you in a really competitive range. That means that you can have some previous mistakes on your credit and just continue to build it up and get higher and higher. And again, for the VA loan, 0% down. So for all you veterans out there, VA loan, you maybe don't need as high of a credit score as you would think. And then for the final loan option that we're going to talk about today, the USDA loan, and this one requires a 640 credit score. So still a lot lower than what most people think. I feel like when I think of getting pre-approved for a mortgage, my mind always goes to 700, 720 credit score, but really you can be multiple hundred points below that and still be in line for a really good loan option. Now, here's the big difference that can be made when you have a higher credit score as compared to something that's a little bit lower. Now, meeting the minimum credit score does mean that you're going to be pre-approved for a loan up to a certain point, but it does not guarantee you a good rate. You see, on a $350,000 loan, the difference between a 620 credit score and a 760 credit score could be anywhere between 1% or 1.5% of the interest rate, which is big time savings if you can boost your credit score up, because 1%, that makes a massive difference in your monthly payment. Over 30 years, that 1 or 1.5% on an interest rate is tens of thousands, sometimes hundreds of thousands of dollars, depending on the price of the home. So if you're close but not there yet, it might be worth taking a few months to build up your credit instead of rushing into a home at a 600 or 620 credit score. Build that up a little bit more and see how much that's going to help you with your monthly payments, going to help you get pre-approved for a little bit more, maybe get you into a house with a bigger backyard or an updated kitchen. Now, a few tips on how to improve your credit score, and I would say the fastest ways to do this before buying a house is to, number one, you want to pay down your credit balances, ideally below 30%, so you don't want more than 30% of your credit being used up. This just shows that that you're borrowing at a good rate, you're not using all the money immediately, and that you can be trusted with a higher loan amount. Number two would be, don't open up any new accounts. When you open up a new credit account or a new loan, this is going to be a ding on your credit score because they have to do a hard pull on your credit, make sure that your background is all clear. And then something that a lot of people don't think about is not closing their credit cards either. When you close your cards or close an account, what this does is it drops the total amount of credit usage that you have available. So this is going to increase the amount that you're using over the entire thing. So say you have $10,000 worth of credit cards and you have $2,000 in debt. Now, if you close a credit card that's $5,000, instead of using $2,000 out of the $10,000, you're now using $2,000 out of the $5,000. So that's going to look a lot worse to lenders, to anybody who's trying to give you money, because it shows that you're using a lot more of your available credit limit. Now, something else that I recommend is monitoring your credit. So you can use a free tool, something like Credit Karma or Experian. This way you can monitor your credit every single month. Typically it gives you specialized reports. It tells you, if you've had any hard pulls on your credit, if you've had any new accounts open, what accounts might be affecting you, how much your credit utilization's at. So if you have a $10,000 account and you're using all $10,000 of it, it's gonna say that you're at 100%. So reviewing that, kind of checking where your finances are at every single month is going to help you get to a higher credit score and help you get a lower monthly payment by reducing your interest rate. It's important to note that checking on these every 15, 30, 45 days is super important, because in the span of 60 to 90 days, I've personally seen my credit score change in 15, 20, 30, sometimes even 50 points, depending on if I'm paying off credit cards, opening up new credit cards, getting a car loan or a personal loan, or however it works out. These scores can be impacted heavily in just a short amount of time. So make sure you monitor these and keep a close eye on them to see what you're at. Now, when you're thinking about an Experian or a Credit Karma, those are going to be soft pulls. So those aren't going to have any dings against your credit or anything like that. But when it's time for you to get pre-approved with an official lender, what they're going to do is called a hard pull. And what a hard pull does is it temporarily drops your score by a few points, and this is because the lender's accessing your file and reviewing all of your financial information that has to do with your credit. But if you apply with multiple lenders within a 14 or 45-day period, all of those pulls count as just one inquiry. So that's important to remember. That way, if you go to 5 different lenders, you're not gonna think, man, my credit score is gonna drop by 45 points because each lender is doing a hard pull. Nope, counts as one inquiry, so feel free to shop around, get the best rate available. And it's important to note that you don't need a perfect credit score to buy a home. Like I said, you can be down as low as 500, up to 780 and above. And at all of these levels, you have options available to you. I will say that the higher your credit score is, the less money you're gonna pay in interest, but it doesn't mean that you're without options. Now, you need a plan. And if you're not sure where to get started, the first step is to get your credit pulled by a lender. This is going to open up the door for your opportunity, show you where exactly you're at. It's free, and it gives you a real starting point. I'm happy to refer a great lender, whether you're in Madera County, Fresno County, Mariposa County. I have connections. So if you are looking for somebody who's trustworthy and can get you in the right direction, ready to get pre-approved and make an offer on a home, just let me know. Drop a comment or send me a message.